Hi everyone, this is Paul Fichet, Chief Investment Officer at New Road Capital, just giving you your June market update. So June really a phenomenal month for assets again and for investors. And it's a story we've been saying for a while now. We've been talking about how we think this rally in equities and bonds is going to be sort of unloved, and there's a lot of cash sitting on the sidelines, and it's really going to climb a wall of worry, and that's what it's continuing to do. So really happy. We do feel like we've made the right calls over the last few months. We've been riding this market upturn quite nicely. So if you look at the local all share up 2.5% for the month. MSCI World, which is your developed market equities, up 4.3% for the month. And then emerging market equities up 6.1% for the month. So across the board, just really strong equity market performance. And that's despite all the news you're seeing, the geopolitical news that's coming out. And we think a lot of that is, depending on the media's got a certain framework and it likes to focus on certain aspects, but really looking through the noise. And that's what we've been doing for the last few months. We're really actually quite bullish and quite positive over geopolitical events at the moment. And we think this market will continue to climb this, as I said, this wall of worry. So yeah, phenomenal returns. All the funds have had a really great June across the board. All very and that's sort of top end in terms of returns amongst their various risk profiles. If we get down to inflation, we've been saying that inflation is going to remain muted, even in spite of tariffs coming through. Inflation will remain muted, and that's the case. So if you look at American inflation, sitting at 2.4%. And core inflation flat at 2.8%. And we actually think, you probably see these numbers coming down over the next little while. So, we're also starting to think that you'll see the US Fed starting to cut rates again. The market's kind of been a little bit hawkish on that and kind of thinking that you might see rates cut later rather than sooner. But we think with these numbers, it's going to be harder and harder for the US Fed to hold rates where they are. Real rates are quite high at the moment in the US, and there's going to be continuing pressure for those rates to come down. So we think quite bullish there. And that's fed into the bonds as well, which we'll talk about just now. Local SA inflation sitting at 2.8%, flat again from the previous reading, and that's below the inflation target of 3 to 6%. So we will be expecting some good news there as well in terms of rate cuts coming forward. The rand dollar exchange rate, so the dollar's been quite weak despite phenomenal performance in the equity market. So we think even though the dollar's been weak, you've been more than compensated it by owning US equities that have just been rallied phenomenally, and the recovery since the sort of let's call it Liberation Day tariff announcement has just been quite rapid, and we think that'll continue as well. So excited about that. But if you look at the rand dollar, it went from about 18 rand at the beginning of the month all the way down to 17.75. So it was quite volatile intra-month, but we're strengthening through the month. US SA bonds still with a healthy bond spread, so we still like SA bonds at these yields, still yielding very attractive yields, and that ties into the Albi return for the month, which was up at about 2.28%. So phenomenal return for bonds as well in the month. And then if we look at the G7 bonds, that's your biggest 7 economies in the world. Bonds, they're also rallying quite nicely, up about 1.8% for the month. So it's a really, a strong risk on month for all asset classes, and something that we in our funds were able to take quite good advantage of. So, we're still quite bullish, and we've been talking about this for a while. We're still quite bullish. We think that this trend will continue for a while to come. We think you're still going to see sort of negative geopolitical news, but positive geopolitical outcomes. So continuing news around tariffs, good news around tariffs. We don't think that the tariffs are going to be inflationary. Inflation's been flat now for 3 months after the tariffs have been announced. So, and that was our thesis at the beginning. We didn't think it would be inflationary, and it hasn't been inflationary up to this point. So really quite positive. We're quite positive on the markets and excited about what's to come. So yeah, as always, if you need me or the team, please don't hesitate to reach out. Otherwise, I'll chat to you in August for the July commentary. All the best. Bye.